Most altcoins are down by more than 40% since March. But some have been surprisingly resilient.
Very resilient.
Resilience and adaptability.
Solana is one of them, and this has left everyone wondering whether Sol could actually surprise to the upside when the crypto bull market enters its parabolic phase. And that's why today we're going to tell you what Solana has been up to and how high Sol could go in the coming months. If you hold Sol or are thinking of picking it up, this is a video you can't afford to miss. I'll start by saying that nothing in this video is financial advice. It's purely educational content that's meant to inform you about Solana. And I'll also note that many members of the Coin Bureau team hold Sol in their personal crypto portfolios, but we will be as objective as possible in our analysis, as always. That said, it's only been around 3 months since we last covered Solana, but a lot has happened since then. For starters, Solana actually flipped Ethereum by stablecoin volumes. This was back in March when the crypto market was experiencing a mini alt season of sorts, and Solana was front and center of it. What's interesting is that its price peaked shortly before the FTX estate announced that it would sell 41 million Sol to investors at a 68% discount. That's worth about $7.6 billion. FTX finished these OTC sales back in May, but it's important to point out here that they're all subject to vesting schedules over 4 years. In other words, there should be minimal, albeit steady, selling pressure coming from these buyers if they do sell their Sol when it vests. Now, as most of you will know, the reason why Solana was so popular was because of all the meme coins that were launching on its blockchain. This meme coin hype was facilitated by the March launch of the Pump.Fun meme coin generator. Oh, and here's a fun fact. It recently flipped Ethereum by transaction fees. That's right, folks. A meme coin generator on Solana generated more fees than Ethereum. What a time to be alive. Now, there's a simple reason why Ethereum is bigger than Solana, and that's reliability. Solana's meme coin hype basically brought its blockchain to a grinding halt. And though it technically didn't experience any sort of outages, the congestion issues were so bad that it became almost unusable. For reference, these congestion issues began in April, and they seem to have been one of the biggest contributors to the FUD in Sol's price since then. Solana's validators subsequently implemented a technical upgrade that was supposed to fix the congestion issues, but it still seems to have persisted for some users. Thankfully, though, this didn't dissuade institutions from adding Sol to their crypto bags. A CoinShares report found that since the start of the year, 15% of institutional investors it surveyed had increased their Sol exposure, though it's possible that some of this potentially came from those who gained exposure through the FTX OTC sales. In any case, there was another bullish catalyst for Solana in April, and that was the news that Stripe, which of course we know is a very large payment processor, would be introducing USDC payments on multiple blockchains, including Solana. This is significant because Solana has been positioning itself as the blockchain for crypto payments. That's why the news in May that PayPal had launched its PYUSD stablecoin on Solana should not be overlooked. In an accompanying promo video, a member of PayPal's team explicitly stated that they want to use PYUSD on Solana for commerce and payments, and hence its confidential transfer feature. Make no mistake, stablecoin payments could be the killer use case that takes Sol to epic highs. But we'll come back to that a bit later. By the way, if you're enjoying this video so far, be sure to smash that like button and subscribe to the channel and ping the notification bell as well, so you don't miss the next one. Now, June was a very busy month for Solana. It started off with institutional investors doubling down on Sol after its partnership with PayPal was announced. Institutional investors weren't the only ones feeling the FOMO either. USDC issuer Circle announced it would also be launching enhanced stablecoin features on Solana. As a fun fact, Solana is actually the official blockchain for USDC, at least according to a blog post by the Center Consortium. It's not clear if this is still the case because the Center Consortium, which governs USDC, dissolved the last summer. For those that don't know, the consortium consisted of Coinbase and Circle. Anyways, speaking of enhanced features, Solana introduced an enhanced feature of its own called blockchain links, or blinks for short. As the name suggests, blockchain links make it possible to post a link anywhere on the internet that you can interact with using a Solana wallet like Phantom, for example. It's pretty cool indeed. What's not so cool though is the news that the CFTC is investigating Jump Crypto. For those unaware, Jump Crypto is a key player in Solana's ecosystem. It helped build the Pyth network oracle, the Wormhole bridge, and is even helping with Solana's FireDancer client, a key piece of infrastructure. How exactly an investigation into such a pivotal firm in the Solana ecosystem will impact its development remains to be seen. I guess it all depends on how much of the development of FireDancer is being handled by other companies in its ecosystem. Now, fortunately for Solana, the news of the Jump Crypto CFTC investigation seems to have been overshadowed by reports that Van Eck had filed for a spot Solana ETF in June. But it's assumed that Solana will not be getting an ETF anytime soon, despite the spot Ethereum ETF approvals. However, many analysts have highlighted the fact that a Sol ETF could be approved if there's a change of administration in November. And that's just because it could also mean a change in leadership at the SEC. It's admittedly a tall order, but it seems possible given the increasingly bipartisan support for crypto on Capitol Hill. Even so, Bloomberg ETF analyst Eric Balkunas underscored the fact that the final deadline for the Sol ETFs will likely be sometime next March, which is quite a way away. By the way, 21 Shares also filed for an ETF after Van Eck did, and it's likely that we could also see other asset managers follow suit. As with the spot Bitcoin and Ethereum ETFs, there is a wide range of predictions about how a Sol ETF could affect its price. At one extreme, some projections believe that there's next to no effect at all. At the other extreme, some projections believe Sol could rip by more than 9 times from its current price. Something that they are pointing to that could back this up is the fact that Grayscale's GSOL Trust is trading at a massive premium to its net asset value. Institutions are bullish AF, in other words. Anyways, bringing this back to the Sol price, some of you might know that our top of the bull market target for Sol is somewhere around $1,200. This is coincidentally consistent with the 9x projections made by some crypto analysts. And it's possible if those ETFs launch when the crypto bull market is hitting peak euphoria. And this brings me to Sol's current and future price action. Whereas most altcoins have been crashing, Sol has been consolidating. You can tell because it's essentially been chopping between $130 and $200 range since late February. Though it is worth noting that this is also the case for Bitcoin, Ethereum, and other large altcoins. Obviously, consolidation is typically followed by a big breakout to the upside or the downside of the particular range. The chart suggests a breakout to the upside could take Sol as high as $300 in the coming weeks, whereas a breakout to the downside would take Sol as low as $90 in the same time frame. Of course, getting a sense of how high or low Sol could go doesn't really tell us which way it will go. To figure that out, all we must do is look at the sources of new supply, i.e. selling pressure, and the drivers of demand, aka buying pressure. This is just because supply and demand are what determine price. On the supply side, Sol's supply seems to have increased by around 20 million since we last covered it. Assuming an average price of around $150, this means that Sol could have experienced as much as $3 billion of sell pressure in less than 4 months, assuming, of course, that all of it was sold. This sounds like a lot until you realize that the demand side of the Sol equation has been even bigger. Here are a few stats to consider. First, the Phantom wallet has over 4 million downloads. To put things into perspective, it had 3 million when we last covered Solana. Second, according to DApp Radar, Solana's Radium Dex has seen over 5.5 million unique active wallets in the last 3 days. This is an almost 4 times increase compared to the 1.4 million back in March. DApp Radar also notes that there's been a 50% increase in active wallets in the last month. Third, the total value locked in Solana's DeFi protocols continues to hover around 4.5 billion. This despite Sol's price declining 20 to 30% from its recent highs. This is significant because it means that new money is entering Solana's DeFi protocols despite the price dip and the generally bearish market conditions. Fourth, and most importantly, this is all consistent with the number of active wallets on Solana, which has been holding steady at around 900,000 per day, according to SolScan's analytics page. And this brings me back to Sol's current and future price action. The strong demand side of the supply and demand equation is why it's been so resilient. The fact that the trend for these demand drivers continues to be going up suggests that Sol has a higher chance of breaking to the upside. In other words, there's a higher chance in the coming weeks of Sol rallying to $300 than crashing to $90. And that would translate to an almost 50% gain from current prices. Just keep in mind, though, that this would require a break above $200, and that requires a catalyst. Regardless, if you want to make the most of this potentially massive move, then be sure to check out the Coin Bureau deals page. It has trading fee discounts of up to 70% and sign-up bonuses of up to $100,000 on the best crypto exchanges. These deals are exclusive to Coin Bureau viewers and they won't be around for long. So be sure to take advantage of them ASAP using that link in the description. Now, you'll recall that a break above $200 would require a catalyst of some kind. As it so happens, Solana has no shortage of upcoming milestones that could play that role. The most notable of these is, of course, Firedancer, the aforementioned validator client. To bring you up to speed, Firedancer is a big deal because it will increase Solana's speed. In a recent interview, a member of the Firedancer team revealed that it will initially scale Solana to 20,000 transactions per second, or TPS for short. It will then gradually work its way up to 1 million TPS. For anyone wondering, Solana's highest recorded speed so far is around 7k TPS. And while its highest possible TPS is believed to be around 65k, a member of the Firedancer team revealed that it's closer to 200k. However, he also said that serious issues arise when you surpass the 80k TPS level, so scaling to 1 million will require other changes. Anyhow, regarding timeline, Solana founder Anatoly Yakovenko has mentioned in many interviews that his team hopes to roll the initial version out before its Breakpoint conference in September. The fact that they recently announced a bug bounty for Firedancer suggests it will be sooner rather than later. Before you get too excited though, I'll remind you that Jump Crypto is helping to build Firedancer and they're currently being investigated by the CFTC. And I'll also remind you that Solana has a bit of a history with technical issues. A member of Solana's Jito validator client team has revealed in a recent interview that Firedancer could also encounter some issues. With that said, if Firedancer causes Sol to break above $200, then the chances are that the catalyst that takes it above $300 will be announced at Breakpoint. Some of you will also recall that previous conference announcements have had a huge impact on the price. Besides Firedancer and whatever is announced at the conference, Solana seems to have 2 other upcoming milestones that could boost Sol's price. The first is the development of formal on-chain governance structure, something that's been discussed in Solana's forums. Developing a formal governance structure will help to decentralize Solana and hopefully, this will reduce the regulatory scrutiny it's been facing from the likes of the SEC. To refresh your memory, Sol was noted as being an unregistered security in the SEC's lawsuits against Binance and Coinbase. Now, the second upcoming milestone that could boost Sol is a lot more significant, but also much less certain. And that's the passing of stablecoin-related regulations in the US. Austin Federa, the head of the strategy at Solana Foundation, asked pro-crypto politician Bill Haggerty about this in an interview. Unfortunately, Bill effectively said that it would be a while before stablecoin regulations are passed. And this is just because there's still a lot of opposition from Democrats in the Senate, despite otherwise bipartisan support. And this would explain why large SOL holders have been doubling down on funding Republicans. For what it's worth, it looks like the next 8 months are going to be pretty action-packed for Solana. First Fire Dancer, then whatever happens at Breakpoint, then stablecoin regulations, assuming a Republican victory in November, and then an ETF early next year, assuming again a Republican victory. These upcoming catalysts make it easy to see how SOL could surpass $1,000 before the crypto bull market is over. But it also makes it clear that this will require a lot of things going right that are completely outside of Solana's control. And this, of course, brings me onto everyone's least favorite section, the challenges we potentially foresee for Solana. The first challenge is, of course, regulations. As with the bullishness of stablecoin payments, the bearishness of the Jump Crypto CFTC probe should not be overlooked. For example, assume that the lawsuit gets so involved that Jump decides to scale back a lot of its crypto business. This isn't just speculation either. The head of Jump's crypto business resigned a few weeks ago. If such a large firm in the Solana ecosystem decides to scale back, it would significantly roll back the timeline for Fire Dancer, etc. There's also the SEC's ongoing scrutiny of SOL as an asset itself. This is likely to continue for the foreseeable future. If the Democrats sweep Congress in November, then the scrutiny of Solana will probably intensify. Now, Solana's second challenge is, well, competition. It's easy to forget that they aren't the only super fast L1 on the block, or should I say blockchain. So-called Solana killers like Aptos and Sui are starting to gain ground in the layer 1 race. And not only that, but Anatoly has admitted in interviews that they are concerned by the competition posed by these projects. This is understandable when you realize that Aptos and Sui weren't created overnight. The technology behind them had been in development for years at Facebook. For those unaware, these projects were born out of Facebook's Libra project, but that's a topic of another video entirely. Either way, the result is that Aptos and Sui don't only have the tech, but also the relationships. Moreover, I have spoken to many developers who find the Move programming language to be incredibly easy to build on. Now, even though Aptos and Sui haven't seen as much adoption as Solana, any technical issues Solana experiences could cause many users to jump ship. It will be analogous to how Ethereum killers saw adoption because of Ethereum's unaffordable gas fees, for example. History doesn't repeat, but it does rhyme. And this ties into the third challenge, and that's development. Anatoly and other Solana developers jokingly say that building on Solana is so hard that it's analogous to, quote, chewing on glass, which I can only imagine isn't good for one's digestion. In all seriousness, though, this is a risky position to be in when you have competitors with supposedly seamless programming languages. Case in point, if you watched our recent Sui review, you'll know that Solend, once one of Solana's largest DeFi protocols, deployed on Sui as SuiLend. To be clear, this doesn't mean that Solend has abandoned Solana, but it does suggest that Solana developers and projects are exploring other blockchains. With all that said, though, there's no question that Solana is a top crypto project and that SOL will experience incredible gains in the coming months. If Solana can address its challenges and meet its milestones, SOL could easily surprise to the upside, and we believe the chances of that are quite high. And that's why most of us here at the Coin Bureau hold it as part of our crypto portfolios and believe it will be one of the top performing cryptos among the large caps. In fact, we believe there's a good chance it will see the highest returns in percentage terms out of the cryptos currently in the top 10. What this means is that the altcoins in Solana's ecosystem could see even larger gains relative to their peers. And if you want to know which cryptos these are, then be sure to join the Coin Bureau Club. It's where we explore promising up-and-coming altcoins voted on by our members. The link will be down below. And that's all for today's video. If you found it informative, let us know by smashing that like button. And if you want to stay informed about promising crypto projects, then subscribe to the channel and ping the notification bell as well. And if you want to inform others about Solana, then share this video with them. As always, thank you very much for watching, and I will see you in the next one. This is Nick, signing off.